think it's kind of funny. I think Donald Trump is really messing with the professional money manager. I think it's funny. I think he's actually doing it to help his voter base that believes in him. Let me tell you what I mean. The professional money manager absolutely cannot put money to work when a president of the United States says, now's a good time to buy stocks. Okay? The professional money manager's head explodes. You can't sit down with your investors at a professional hedge fund or whatever and say, I'm going to load up on stocks. The president just said, now's a good time to buy stocks. Can't do it. Can't do it. You have to act smart. You have to be smart. You got to come up with all of your strategies. You got to back test to make yourself relevant. You're going to show this is what happened in other periods when this, and that happened, all of which is ridiculous this year because there's no way to model Donald Trump. But they do it anyway. So they're wildly underinvested right now. And what Trump is doing is he's helping the little man, right? He's helping MAGA. He's helping all of his followers. Because those are the guys that say, Trump just told me to buy stocks. Okay, I'll buy stocks. Like, you know what I'm saying? They follow whatever he says. So he comes out there with this insane tariff policy that totally screws with every major hedge fund institution, blah, 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 who's using past cycles and recession analysis and PE ratios and all this other kind of crap, okay, to make investment decisions. He's totally messed with them because they're all of their strategists say they should be dumping stocks and getting short. Then he turns around and tells everybody, go buy the market. And the only people that'll listen to him are MAGA faithful. You and I got long 3 weeks ago. Trump was telling people to buy the market last week. You and I got long 3 weeks ago because our strategy is just about reading and reacting to price action and liquidity. That's it. Take a look at this chart about how underinvested people are right now. Look at how underinvested asset managers are right now. The dark blue line is asset managers, and the light blue line is the S&P 500. So the S&P 500 is skyrocketing, and these guys are flatlining, totally underinvested. It's fascinating to me what's going on right now. Institutional positioning in the S&P down here with the market running away. So people ask me, how high can the market go? These people are going to be out of business if they don't put capital to work. These people are going to be out of business. They're professional asset managers. They're tied to the performance of the S&P. They can't get to the end of the year and have the S&P up here and they're still down here. So they're going to have to capitulate and put capital to work. On top of that, there's a large short position in the market. That has to clear. So I submit to you that it's very possible the market goes a lot higher in short order. And the last piece I'll layer on top of that is there's an enormous amount of capital run based on volatility algos. We talked about this yesterday. Volatility is plummeting. Those portfolios are on autopilot. When volatility collapses, they put money into S&P futures. When volatility skyrockets, they dump S&P futures. It exaggerates short-term swing moves in either direction. Volatility is imploding right now. And so all of those algo-driven portfolios are just putting money into the S&P every day. Yesterday's move, big gap up, close at the high, is as bullish as you could possibly get. Everybody out there before it happened was talking about, oh, when you gap above the 200-day, that can be dangerous. It gapped above and closed at the high. There's forced buying going on. So I don't know where this is going to end. I'm not cheerleading. I'm just telling you what's happening. And what I'm saying is we just raise stops. We just raise stops until we get stopped out of some positions. Okay.